What's up, guys? It's March 28th, 2025. Hope you guys had a good trading day today. It's kind of late in the night, so I appreciate you guys tuning in this late. Had a bit of a busy day, so the reviews happened tonight. I want to give a quick shout out to all my supporters and the new members. I appreciate you guys always tuning in and asking questions. You guys keep this thing fun. Be a quick one. We start the video off the same way every time, and I feel like we have to. We've been counting these legs, but that leads into the conversation. The spike actually starts here, and I've been drawing it from here. So leg one, pull back leg two, pull back leg three, pull back leg four. Any leg past leg three is trading range behavior. So the trading range actually started here, but we didn't know it. Or excuse me, it started here, but we didn't know it. Last leg in a trend is the first leg in a trading range. So this is the first leg in a trading range. It's the last leg in the trend. And then bulls rallied to it and sold off, creating a double top bear flag. I trade options here and there, and I really wish I capitalized on this trade. I just kept hesitating. The reason I'm bringing that up is because I didn't trust the breakout. The breakout say this is a strong breakout, and bears are going to want to get a retest. So what I'm trying to say is I think I put too much thought into this. When we're trading, it's best to just follow the price. It's best to just follow the price action. Price action says that bulls are failing at a recent swing. This is a good short. Bears want to test the previous low and they want to make a new low. If they make a new low, the trend is intact and this is nothing but a pullback. If they make a double bottom, then well, that's a double bottom. Bulls are going to buy that. If we rally straight up from, well, not straight up, but you know what I mean. If we pause a little bit and then we start to go straight up, then that's a higher low, and that's the worst situation for the bears, best for the bulls. Higher, low, lower. Those two always get me tripped up. So that's the best for the bulls. Remember, there's three types of trend line breaks. Best for the bears, acceptable for the bears, that's equal low. Worst for the bears, best for the bulls. So we'll see what happens. It'll be interesting to see. I just think it's really cool to see the markets from we're able to put the pieces together now. 15-minute chart, we have a gap down, then we have continuation. Big bull gap, big bear gap, excuse me. It's late. First opposite bar, that starts the channel phase. If you guys watched the free membership video, I talked about landmarks. I kind of came up with that on the fly, but it's been sticking with me. So a landmark, we have 3 bars in a row. That opposite bar, we're in a channel phase. Can't deny that. The next landmark, we have a channel against the main trend. We're in a trading phase. You can't deny that. So think of that. Just think about that if you're confused on what the market's doing. Look at the last set of many bars in a row, and then look for the first opposite bar, and we channeled. And then look for if there's an opposite channel against the main. It just started raining. Look if there's an opposite channel against the main channel. So here's a bear channel down, it's micro channel here, and bulls get a channel up here. So now we know we're in trading range. And one more layer we can add is gaps. If gaps are open, we're trending. If gaps are closed, we're trading range behavior. I was talking to some of the people in the Discord today, and I was saying trading is like layers, okay? What we want to do is get really good at looking at the markets one way. For me, it's the market cycle and leg count. I hope by now it's kind of rubbing off on you guys. So let's just say we're only going to look at the market cycle. Okay, we have an opposite bar, so that actually starts the channel. But we could say this is a fresh breakout from 4 all the way down to 13. 14 being the first opposite bar. That's the first landmark. So we actually have a bull channel pretty early on right here. That's a bull channel. So the trading range could be maybe on Monday, could be all the way up here. Or maybe there's so much bear momentum we break out and keep going. But this is a channel. Here's a channel, and you can see more sideways behavior. So we look at the markets from one way for an extended period of time. And then all of a sudden that starts to become ingrained in us. We're like, oh yeah, easy, opposite bar, we're channeling, I'm selling pullbacks. Oh, it's sell the close here. So I'm going to sell the close. I'm going to get out on the first opposite bar because I know a pullback's coming. 2 seconds. That's something stuck in my throat. And then the next landmark we look for is a channel against the main channel. Now we know our trading range is buy low, sell high. We look at that over and over and over again for so long. Then we start to say, like, wait a minute, this gap just got closed. Wait a minute, there's no more gaps. Now we're starting to layer something. Then we get really good at reading gaps. We see open gaps, so we have a bear bias, and then we start to short. We start to short bull bars and target their gaps because we know that bears, the best the bulls can do is get a trading range, and our layers, our trading edge develops over time. It's layered, and you just keep getting better and better and better. I've been working on a new system that is a system for when my original system trade fails. So let's just say I actually saw it today. I didn't take it, but let me see. So you guys have seen me stream live, trade live. I see this bar, it gets 1R within a bar, so I'm gonna put a limit order here and go for a scalp. And it actually passed, so that's a bad example. I wanna find a real example. Okay, here. Let's see. That's Of course I can't find an example when I'm talking about it. I think there was an example in the overnight session. I took one yesterday in the Discord. I didn't take it live. This one, perfect. Okay. So this bar here, and I'm trying to show you guys what I'm showing is how we develop our edge and it becomes layered, because this is just new to me. And now all of a sudden I'm looking at the markets from an extra 3D, like an extra perspective, which is support and resistance flips. So here I saw this bar make 1R, so I wanted to get short. I got short here and immediately stopped me out. When this bar right here closed against that, this turns, so this is resistance right here. This bar here closed above that, so now resistance becomes support. I actually put a limit order right above this, and then I went for the opposite 1R right there. And you can see as soon as that bar closed, I got filled here and I got tagged out there. Or was it? I'm looking at the time, 5:10. So yeah, that does line up because that was the afternoon session. So you guys see how I've never talked about this. This is literally just happening this last week, but it's just another layer to my edge. And then maybe in another 6 months, this will develop into something else and something else. So it's very important that we stay consistent and look at the markets from one perspective. Okay, I think I've been rambling too long. You guys probably are getting tired of my voice. Let me do this quickly. It's Friday night. You guys, I'm surprised if you're here right now. Gap down, bar one, bear bar. Excuse me. Gap down, bar one, follow through, bear bar, but closing above its midpoint. Bar two, pull back. Bar three, 2-bar reversal against bar two. Bar four, bad follow through for bar three, bear bar closing on slow. But then we start to break out. 5, 6, and 7. That's a 3-bar micro channel breaking out of the opening range with a gap down. Could go for a measure move of the gap, could go for a measure move of the range. Obviously that was met quite quickly. Bar 7, good bear bar closing on its low. Shot to get a continuation down, and it produced a gap. Bar 9, good fall. I mean, everything is good follow through. These are all bear bars closing on their low. You're going to short the low. If you're going to short these bars, understand the probabilities. This is a rare event, okay? After 3 bars, the probabilities for a pullback actually go up significantly. And I think that's interesting because 1, 2, 3, this tail is a pullback. So there's a fractal pullback right here. But for a visible pullback, it didn't happen for 1, 2, 3, 9 bars in a row without a pullback is a rare occurrence. So if you didn't catch this, don't feel bad. This isn't going to happen every single day. What will happen though is a pullback and the first reversal fails, and you could get was that 16, 17, 18, 19, or you could see this whole range right here as a pullback and short the high of 26, short the low of 27. So strong breakout, many bull bars, and then we have 16. First opposite bar starts the channel. Excuse me, we have 14. First opposite bar starts the channel. Follow through for the bulls, but not good enough. 16 bear bar closing on slow. I think that's an acceptable short, but be careful to scalp out because now we have 3 legs down. I had a cut in my mouth. It's tough to. My tongue is messing with it. I should probably edit that out. So we have a leg 1, pull back, leg 2, pull back, leg 3. That's a wedge bottom. Trading range behavior, any leg past leg 3 is probabilities for trading range go up. So this is a leg 3 right here. We go sideways for a few bars. Leg 1, pull back, leg 2, pull back, leg 3. It's a wedge top. This is actually very similar to the daily chart. Strong leg down, 3 pushes up, double top, sells off. Strong leg down, 3 pushes up, double top, sells off. 27, bear bar closing on slow. Bulls definitely want to break above the EMA, but there's so much selling pressure. The second it got close to it, it sold. 29, is that 29? 28, bad follow through. 29, good bear bar closing on slow. 30, good follow through. 31, bull bar closing on its high. Bulls got filled here, so now they're trapped because we can see the tail on 32. They're trapped again on 33. They sell at their position. How do I know they're trapped? It's because it rallied. There's a rally here, so bulls that bought here, it rallied, sold off, rally, sold off. That's twice. The bulls they only had about 10 minutes to get out of break even, if that. And then it sells off 34. Goes sideways for another 2-legged pullback. Weak 2-legged pullback, very shallow. If you're buying the dip here, think about what you're doing, please. And I say that because I used to be that guy who bought every dip and just did not understand that momentum wins. Momentum could also mean range bound momentum, but for this case, momentum is going down. Excuse me. 42, bear bar closing on slow. 43, bear bar closing on slow. 44, makes a 3-bar bear micro channel. Look at 45, it's testing support. So there's a layer of support here. Right here, there's a layer of support. That layer of support gets broken with 42, 43, 45. That's going to become a retest, and that gets tested here. Bang, there's the trade I just talked about. See? Now, this is not a trade I would take because I'm taking it in very specific conditions. But this is just showing you how I haven't mentioned this in the past because I didn't see it. But since I'm focusing on one thing, these layers are starting to reveal themselves. And that's kind of the point I was trying to drive home earlier. I might sound like I was rambling, but that's what I'm trying to say. 45 is testing the breakout point. 42 is low, sells off. You can make a scalp here. Well, the real scalp is from the, let's see, get the high. Okay, so it's actually not met. 1-to-1 was not met if you caught the high, but it was still, you had a lot of time to scalp out for a few profits before 54. And even then, if you caught the low here, you'd only be in a drawdown for these bars. So it's not the worst. That's the point. So good scalp here, and then it rallies and we go sideways. Trading range behavior, we're in the third leg. Leg 1, pull back. Leg 2, new low, pull back. Leg 3, new low. Sideways behavior. Trading range behavior, it's sell the pop, sell the EMA, sell. It's not buy. If you're gonna buy, you gotta buy the low. You gotta buy the low of 54. You gotta buy the low of 64. You gotta buy this low. And when I say buy, I mean buy with a limit order. So I don't think it's worth the pain to, unless your account's huge and you're trading macros. The easy trades is to short the breakout point, short the 50% of the last strong bar. Now we're looking at this. You short the 50%. You short not the 50%. You short the breakout point here. So you see 57. Put a limit order. But you want to make sure there's good momentum. Just because it's a breakout point doesn't mean it's good. The bears that shorted 57, they sat through one pullback before they started making money. So they're probably going to come back again. The market does come back, and you can see how now there is a bigger drawdown for the bears. Did I say that correctly? So bears that short 57, they sit through 58, and then they're in profits. You put a limit order, a little bit weaker, but you get filled around here. You sit through a drawdown, and you make your profits again. And then now you see this as you see 69 as a strong breakout point. Put a limit order there, you get filled here, and you make your profits again. So that's kind of how you scalp. That's what I'm doing at least, and I've been finding great success with it. I do like it a lot more. Still based off breakouts, and 3-bar micro channels, but it gives me more. I can maneuver. Honestly, one thing that does frustrate me with limit orders is I'm gonna miss things like this. But how I mentioned earlier, this is a rare occurrence. This type of price action happens way more than this. So it's it's a trade-off. Anyways, guys, hope you enjoyed this. Hope you don't think I was rambling. It's been a long day. It's late at night here. I'm gonna go to sleep. If you learned something, share the show. Don't be a hoe. Thank you for your support. I will talk to you guys on Monday. New membership video dropping within 1 to 2 weeks. I'm working on it. Thanks, guys. Have a good night. Be safe. No drinking and driving. It's dangerous. Don't do it. Bye.